Welcome back, everybody. Sive Morten here with the Forex Peace Army. Let's keep going with the analysis of the gold market. Yesterday we have dedicated a lot of time to discussing all background on the gold, explaining why the situation remains complex. It's very difficult to trade it right now, and probably in the current moment, no just single solution that we could call as a correct solution exists right now. So, in fact, market shows signs on the both sides. And depending on how you will trade and depending on your tactics, you could extract the potential benefits as from the trading on the downside and the trading on the long side. So why? Actually, starting from the daily chart, we already mentioned the grabber here, and it has been confirmed yesterday. Today, we could get another one if it will close somewhere near the lows. But this is FXCM chart. It's a retail broker chart, and the questions with these grabbers are, well, that they are not actually absolutely definite, because if you take a look at the futures with the nearest standing contract, you will see that we do not have a grabber. On some exchanges you also do not see the grabber, but if you take a look at the February futures, you will get it. On retail brokers, most of them showing that this grabber exists. This is in the spot market. So from that standpoint of view, we also can't say that it's 100% guaranteed pattern. And it's especially important when you're dealing with the big bullish momentum. And if you plan some counter trend trade, the one thing that you do not want to get is to get some doubts on the particular pattern that you intend to trade. That's the worst thing that you prefer to get. So from that standpoint of view, it would be better to take some additional measures to protect the position if you intend to trade on the short side. What particular things we could do? On the fall time frame chart, yesterday we've got some minor reversal bar here, some acceleration down, but in general, we can't say that this upward tendency, upward extension is already broken. If we will see that the market is dropping under 43.90 area, breaking the so-called neckline for our hand shoulders, returning back in the range of the pattern itself, it will be bearish. So it will confirm bearish sentiment and increase the actually value of the grabbers that potentially might be formed and already formed on the daily chart. That's might be a very important sign. But until this has happened, some traders maybe will prefer to trying to take the long position here around 43.90 with having some doubts on validity of these patterns that we now are getting. So let's first consider the possible trading on the bearish side. What actually could be done? If you take a look at the hourly chart, so first of all on the grabbers suggest taking out of these lows, which is actually a significant target, really extended downside performance, which will be around 42.80 area. So it's not necessary to really be hurry up with the decision making because it's still a long way to go. On the hourly chart, you could see what we have. Starting of the downside action, it's market forming lower lows, lower highs, but it comes to a very strong support area, to the 43.90, as I said, 44. We have the ABCD target, strong confluence, former neckline. This is the point where you definitely do not want to take the position. You prefer to get a bounce. So if you plan to go with the grabbers and you would like to go short, the one thing that you need to control is the market to keep this tendency of the lowest, lower highs. You do not want to see the market create a new high here. In this case, overall idea will be under question. Correspondingly, you do not need to risk too much with trying to catch and get a position right here, but it will be better to wait for a bounce and reaction on the support area. When the market will come closer to invalidation points, you could take the position. In this case, your risk will be very small. And if suddenly you will see that tendency is broken, that's no big problem. So you will out on the stop, but with significantly less risk. So that's the idea, the first idea for the bearish traders who would like to join the grabbers, but that's the option to minimize the potential risk. Reversal here might be from the different levels. First of all, if we take a look at the initial ABCD, you could see that market already has reached the OP target here. At the same time, we have here a bit more extended ABCD patient with the target around 43.95. So I would say that an area between 43.92, 44 is an area where bullish traders could be interested with the position taken by the same reasons. This is very strong support. Grabbers are, well, still we have some questions concerning its reliability. Yes, they look well, but who knows? So in general, we also have very strong upside momentum, and that is very strong support on the hourly chart. Taking position here also lets you to place very tight stop, and significant chances that you will have the possibility to out at the break even if something really will turn bearish, because at the first touch of the support probably will get the healthy bounce. This is a rather strong area. So that's two different tactics depending on the direction that you intend to trade. The next step, the further direction, will depend on the patterns that we have. If grabbers really will work, the bears will take control. If they will fail, here market will form higher top, and probably bulls will have the control with the ability to keep the moving higher. In the current moment, we can't say what will happen on the next stage, but as I said in the beginning of the video, depending on the direction, any trader could extract the benefits whatever direction currently it will trade. You just need to take position at the different points. So for the bears, it will be the pullback and attempt to take position as close to the stops as possible. For the bulls, this will be right on the bottom, so somewhere inside of the support area, which minimizes your potential risk. So that in towards what we have. Currently, it is impossible to just provide some more clear analysis currently in the situation. So depending on your direction, what direction you prefer to trade, think about these tactics, decide whether you would like to take part in it or not.